Save the company also is the new CEO getting on the earnings call and saying, we are repositioning as an AI company, an AI-fueled company that helps people look for homes. Again, just mentioning AI, that doesn't cut it for investors at this moment, so shares really taking a beating this morning. Finally, we're also looking at Take-Two Entertainment. Shares are down 6%. They, yet again, have delayed the release of the latest Grand Theft Auto. It was slated to come out in fall of this year. They originally delayed it till May of next year, and now they say they need to delay it even further, this time for November of 2026. Of course, the big concern around there is just it means costs pile up as they try to finish this game, John. Danny, thank you. Stock is down by 6%. More from Danny in the next hour. On our radar this morning, Tesla shareholders approving CEO Elon Musk's massive $1 trillion pay package. To get the full payout, Musk needs to deliver on financial and operational targets, including expanding Tesla's market value to $8.5 trillion US. Elsewhere, China's exports slumping unexpectedly last month, dropping more than 1% from a year earlier. Beijing's global shipments to all nations except the US actually increased, but not enough to offset the more than 25% decline in shipments to the US. And finally, the Senate planning a vote today to end the government shutdown. Republicans are hoping an amendment continued resolution that includes a promise to vote on extending healthcare subsidies will entice some moderate Democrats.
So basically, is this just a show vote, though? And that's what some Democrats are concerned about. But there are some Republicans that are having these bipartisan discussions with Democrats, also saying that they would like to see an extension. This is what Punchbowl has to write. At least 10 Republicans have approached Democrats to express interest in an extension of the tax credits. If that is the case, this could be the contours of an off-ramp to reopen the government.
I just wonder who's taking the brunt of it. Do Democrats still have the upper hand, or are people getting fed up at this point, more globally, with both parties, given the fact that there are some real people who are not getting paid, who are trying to get second jobs, who are not getting SNAP benefits? We talk about the flights, but we do that a little bit tongue-in-cheek because it's the most representative for people in terms of disruption. There are very real ramifications that are happening across the economy.
Dysfunction in Washington hasn't been popular for a long time. It's not popular now. They need to fix it. Problem is, who's got the higher pain threshold? That's what it always comes down to in Washington. Who's got the higher pain threshold to sit this out and wait for the other side to blink?
I think this year history has taught us the President of the United States, Donald Trump, has the highest pain threshold, and I think April was a really good show of that. He waited really into the last possible moment when the bond market was pushing back. I think he had a call with Jamie Dimon when he finally came out and had a bit of a reversal on his tariff policy.
The government shutdown continues. Let's turn to that labour market. Wall Street missing a second straight government payrolls report, putting the emphasis on private data. Liz Everett-Chrisberg of the Bank of America Institute writing, our internal data suggests a cooling but not collapsing labour market. There was no sign of a further deceleration in October. Liz joins us in the studio for more. Liz, good morning.
Good morning. Happy Friday.
Happy Friday to you too. This is some good news. Are we seeing some stabilization?
I think that's exactly what I would say. We're seeing some stabilization. If we go back to what we were seeing through the summer, we were seeing cooling labor market, and we were seeing that in Bank of America data across kind of the board, both in what we estimate for payrolls and what we're seeing in wages, what we see with unemployment. But the data that came out in October really saw that kind of stabilize. We didn't see a further deceleration. And I think that that's kind of important as we try and understand kind of where the consumer is as well.
Well, where is the consumer? Let's just lean on your internal data. So this is what we hear from individual companies. Expedia, hot consumer. Everything's fantastic. Chipotle, everything's absolutely dreadful. What do you see in the internal data?
Well, the key to understanding the consumer is understanding the labor market, right? So what is going on with wage growth? That's really what's going to be driving the consumer. And what we saw in October was for all income cohorts, we saw they're continuing to see their wages grow, but that growth is decelerating for all of the income groups. So that's kind of the broad picture. But if you drill down into looking at the story by income group, by higher, middle, and lower, it's a very divergent story. So let's start with higher income. Higher income didn't accelerate, was up 3.7%. That was just off of where we were at 4% last month, but that's still pretty close to the high over the last 4 or 5 years. Lower income households, on the other hand, increased by just 1%, which was a deceleration and 0.1% better than the 0.9% we saw in August, which was the low over the last, call it, 10 years. So if you look at the difference between higher and lower income, that gap at 2.7 percentage points, that's the widest gap, tied for the widest gap, since we've had this series starting in 2016. So talk about a K-shaped recovery, talk about a difference between who can afford it and who can't. You're really seeing that.
And that's really what stood out to me in the report, and it just makes me wonder, the K-shape's getting wider. It's getting more dramatic, and I wonder how much that really is picked up by the overall data, or whether we're just hearing it in the anecdotes of McDonald's, where you're seeing, double-digit declines in lower-income consumers. This is where it's from. How much can we actually address that with policy, as people have been talking about, or is it just kind of a wash in the overall numbers?
Well, I think one of the other things that we've seen in our data, and we've seen for quite some time, is you are seeing the trade down by the higher income, going from premium stores to value. But the lower income consumer has predominantly been at those value offerings already, right? So they don't have the ability to trade down. And I think that's an important component.
I guess I wonder how much historical data we have to look forward and say that this is unsustainable and that there is a tell in the lower income households of what's to come in the overall economy. Is that valid, or can this just continue indefinitely?
I think one of the things that we've seen, and we've seen this in the government data and we see this in our own data, that consumer spending is really driven by the higher income consumer. They are disproportionately spending more because they have more. They've also been bolstered by wealth effects, right? If you think about the markets have increased more than we've seen in the wage gains, right? So that's continuing to support them, but most lower income households don't have that exposure, right? So that's something. We look at housing. Housing is benefiting the higher income consumer as well, and I think those are important things to consider.
When you looked at Chipotle and Shake Shack, they were talking about actually how also it was a younger generation. What kind of generational shifts are you seeing in terms of the consumer?
It's a great question. One of the things that we also were able to look at, looking at our consumer deposit data, is how many households are receiving unemployment income, right? And about 2/3 of states, 2/3 to 3/4.
Are high FX costs and complexity holding you back? StoneX Pro delivers turnkey FX solutions that are cost-effective, quick to deploy, easy to manage, and accessible to mid-market firms. Streamline FX flows from trading to settlement.
Seeing the biggest jumps, and overall, younger consumers, their unemployment rate, based on our data, is higher than the overall unemployment rate for the first time, again, in the history of our data.
History of your data. So basically, they're not doing nearly as well as, say, their parents or the generation above them.
No, they're not. But what's interesting is if you also look at that generational data by spend, and you look at Gen X, right, which are people who have children who have just graduated from college and whatnot, they're also getting squeezed because many of them are still supporting. It's the sandwich generation, and so it's something else to consider.
Liz, can we talk about leading indicators? What typically moves first as you start to recover and things do reaccelerate? What would you look for first?
Well, let's look at it the other way.
Sure.
Right? Let's think about it the other way. What are the things that we look for declining? One, I would expect to see a shift in spending from debit cards to credit cards, so people to increase that. And we haven't seen that in our data yet. We would expect to see credit card utilizations increase. And really, in general, we haven't seen that happen as well. This is from last month, but I would also say one of the things I think is really interesting is you've seen the headlines that overall credit card debt outstanding is higher on a nominal basis, which is true. But if you look at those consumers that are carrying a balance, right, the proportion of the amount they have left outstanding and their income, that ratio has actually gone down, because even though I'm talking about wage growth decelerating this month, the fact of the matter is over the past few years, wage growth has been growing across the board. So because wages and labor is higher, even though that absolute nominal amount is higher, you're still doing okay.
Liz, this was the clinic, and we appreciate it. Thanks for being here.
Of course, always great to be here.
Thank you. Liz Everett-Chrisberg there of the Bank of America Institute. Some stabilization, that's some good news. I'll take that.
Yeah, there's good news in the overall data. There's bad news in the underlying details, in the sense that when people talk about the K-shape, it's hard to see how it's going to connect. It seems like it's getting wider, given that you're seeing fewer wage gains.
It's becoming an eye.
Yeah, exactly.
It's
very much
getting
so.
that spread.
And that, I think, is going to be a perpetual feature, because how does that get picked up if the data doesn't reflect it in that kind of way in aggregate?
It certainly speaks to the politics in this city over the last week.
Exactly. When Liz is talking about the fact that you have an increase of unemployment with these Gen Zers, there is basically this concern, and we're seeing in the outcome that they are frustrated with the system and they do not feel like they can be better than their parents. What I love, though, is the Gen Xers, the fact that they are still supporting their children. They're the ones that are really being squeezed when it comes to these generational divides.
If you are just tuning in, welcome to the programme. For the broader price action, we're down by about 1/3 of 1% on the S&P so far this Friday morning. With an update on news worldwide with your Bloomberg brief, let's cross over to Yahira for more. Hey, Yahira.
Hi, John. Wendy's shares are rising 6.8% after the fast food giant reported third quarter sales that declined less than expected. The company also maintained its outlook for the full year after slashing it twice in the previous 2 quarters. This could mark a turnaround for the burger chain after a tough year that's seen shares fall over 40%. Meanwhile, First Brands is desperately seeking access to $600 million in remaining bankruptcy financing. Lawyers warning that without the rest of the $1.1 billion loan, it's game over and the company will have to immediately liquidate. Holdout creditors, including Onset Financial, are fighting the deal, claiming the firm stripped them of collateral. The high-stakes hearing continues today. And Comcast is reportedly taking the next steps in a potential offer for parts of Warner Brothers Discovery. According to Reuters, Comcast is hiring Goldman Sachs and Morgan Stanley to evaluate offers for Warner Brothers Discovery's studio and streaming businesses and has gained access to its financial data. That's your Bloomberg brief. John.
Yahira, thank you. More from Yahira in the next hour. Up next on the programme, the Federal Reserve's balancing act.
After last week's meeting, I see monetary policy as barely restrictive, if at all, and it's not obvious to me that monetary policy should do more at this time.
Up next, Claudia Saab of New Century Advisors, live from New York City. You're watching Bloomberg TV.
You know, Nationwide is more than you think.
That's right. Their Social Security tool helps me guide clients when to file, maximizing their income.
So when is the right time to file?
It depends, somewhere between 62 and 70.
Oh, it's age, right. It's not like 2 p.m.
This is a camera, a device that helps us express ourselves and communicate across cultures, borders, and generations. For businesses, photography and video create a powerful new channel to communicate with customers and deliver new services. Secure and reliable connectivity from AT&T Business helps make it all possible, turning vision into action and helping us stay engaged. Because a camera is a lens into the future. And the stronger the connection, the more clearly we can glimpse what's possible.
High Point University, the premier life skills university, is ranked the #1 best-run college in America by the Princeton Review. Employers value HPU's real-world preparation. Students love unprecedented access to global leaders on High Point's inspiring campus. And parents appreciate HPU's God, family, and country values. Choose to be extraordinary at High Point University.
Sometimes the same thing might not be the right thing, especially when it comes to your investing strategy. Discover Cboe, the exchange that pioneered options trading. With versatile trading products and global data, Cboe gives you the tools to trade in any market environment. Life is better with options. Your investments could be too.
Public broadcasting, it's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
Live from New York City this morning. Good morning to you all. Equity softer by 0.4% on the S&P, down by 0.6 on the Nasdaq. In the bond market, 2-year, 10-year, 30-year bond yields just about unchanged. 10s at 4.09%. And the surveillance this morning, the Federal Reserve's balancing act.
I remain concerned about high inflation and believe policy should be leaning against it. After last week's meeting, I see monetary policy as barely restrictive, if at all. And it's not obvious to me that monetary policy should do more at this time. But the future is inherently uncertain, and I'm watching developments closely.
So here's the latest this morning. Divisions of the Federal Reserve growing as officials voice competing views on the economy. Claudia Sam of New Century Advisors writing the K-shaped economy is a sign that monetary policy is restrictive. That's not a reason to cut rates. Inflation is still elevated, but monetary policy is restrictive. Claudia joins us now for more. Claudia, welcome to the programme. So a difference of opinion, of course, and there's a range of opinions on the committee at the moment, but a difference in opinion between you and, say, Beth Hammack of the Cleveland Federal Reserve, who says we're barely restrictive, if restrictive at all. What do you think she's looking at compared to what you're looking at?
Right. Well, I think there's different ways of kind of defining the issue, but I think it's important to underscore that while the Fed has these broad-based goals, price stability, maximum employment for the economy as a whole, the reality is that monetary policy, the tool they have, raising interest rates to contain inflation, that affects certain groups of households and firms differently, right? It's the financially constrained households and firms that are the ones that can't escape the higher interest rates and have to pull back on demand. So we're talking a lot about the K-shaped economy, and part of that lower arm of the K moving down, that's monetary policy working. Right? That's what restrictive monetary policy looks like. That's not the goal of it, but that is a sign. Now, it is true that there can be cross currents that offset some of that restriction, say higher stock market wealth. But the reality is the Fed is pushing down on the economy, and you can see that in the K.
Is that observation, Claudia, a sufficiently strong enough argument to say we should be cutting interest rates at the Federal Reserve?
No, I don't take it as the fact that monetary policy is working. It may not have done the job, right? So it really gets down to a question of, does the Fed need to do more to get inflation back down to 2%? And that's a lot of this discussion about, well, it's been elevated, it's been moving up, it's all about tariffs, that's going to work its way through. And then you see other members of the FOMC being more skeptical of that argument. Right. And I think that's where the debate is. There is still restriction. It's just this question of, is it enough? And I think the Fed still has room to ease some, to pull some restriction out and still be putting kind of thumb on the scale in terms of getting inflation down. But that's going to be a robust debate, right? Like, people can differ because it doesn't just kind of jump out of the data. You really have to dig under the hood to see, what's going on.
Claudia, do you think that at its core, this is a debate about what the Fed's mandate should be going forward, given the confusing and conflicting data that we're getting around the labor market as well as inflation?
So the current Federal Reserve is unified around what its goals are. I mean, they just went through another strategy review. This is a Fed that is committed to a 2% inflation target. They may be willing, and they may differ in their willingness of how long to kind of, have the runway to get back to 2%. They're definitely different in terms of the risk they see to the labor market and to inflation, but they are unified in what the goals are. So I think that's a place. Now, that could change next year. Right, the Fed is on track to be a different Fed come next year. We don't know how different it's going to be, but I think as of right now, they're unified in the goals. They're just very, have different opinions about how to get there. And I think given how complicated the economic environment is, dual mandate and conflict, it makes sense that they disagree.
Unified in goals when it comes to both the labor market and inflation at the same time. It's hard to understand whether it's the headline numbers around the labor market picture, as John's pointed out, or whether it's the actual unemployment level, the rate, because ultimately we've heard conflicting things from Fed Chair Jay Powell on this point. I'm just wondering, from your perspective, do you get the sense that this is a Fed that is tortured over massive changes to the labor market that make the data kind of unclear?
So right now, it's going to be really difficult. The Fed they have a lot of data, right? We always have a lot of data on the economy, and this is a data-driven Fed still. What we're missing right now are the data that settle debates, right? It really is a problem for them to be missing the government data, the labor market statistics, when that is so front and center in terms of their deliberations. And they're just not going to have a lot of information before the December meeting that would kind of settle the debate. So I expect this to kind of, go down to the wire. And we should understand that even when the government reopens, it is going to take months for the disruptions and distortions in the government data to get all, worked out. So it's unfortunate that, at a moment where there's legitimately reason to be, have different opinions, we don't have the information that would typically kind of get them to rally together and say, okay, this is the next step.
Claudia, can you just build on that a little bit? So we've got about 5 weeks now until the Federal Reserve meeting on December 10th. Starts, of course, on the 9th. 2 days to discuss all of this. Let's say the government shutdown ended this week. How long would it take to actually get some high-quality information on the labour market?
It's going to take time. I think we should understand we missed an entire month of data collection. So historically, this is a very long shutdown that's very disruptive for the process. They don't just pick up, they try to fill in those gaps. And then we should remember the Bureau of Labor Statistics is down 20% of its staff as of the beginning of this year. They are missing a third of their leadership, right? So this is a really complicated moment, and they don't have the staff to really step in and do this quickly. So they will get the job done to the best of their ability. This White House has chosen to reduce the ability of our statistical agencies to do their job. But the idea that the Fed is going to have a lot more information by December 10th from the government, good luck.
Yeah, this is a problem.
That's just not reasonable.
And the Fed right now looks gridlocked, deadlocked. And Claudia, I just wonder, I'd love your opinion on this. Do you think we can break that deadlock by December 10th, one way or the other?
Well, they're going to have a vote, right? The Fed is going to, they never have all the information they'd want. They have to come together and make a decision. There will be a decision, but we need to understand it's going to be a less well-informed decision. They may make the right one, they may make the wrong one, but they're not going to have the information that they typically would have. And it's really unfortunate because the government shut down, the economic statistics shut down, the economy did not shut down. Right. And we don't have a good comprehensive sense of what's been happening since August.
Claudia Sam of New Century Advisors. Claudia, thank you. This was wonderful. Always good to catch up and get your thoughts on things. Difficult decision. What's the harder decision right now? To cut rates or just to stand pat, to do nothing?
It depends on what your ultimate metric is going to be. Is it the idea of the political blowback? Because we know which one that would be. It would be harder to not cut. At the same time, is it potential market blowback? And what really has been this sort of froth that has come out of the market in anticipation of a different outcome in December than people originally expected?
And Claudia makes a good point. Once the government reopens, all right, we're going to get that first payrolls report that's ready to go. But besides that, now all of this needs to be backdated. Where was inflation in October? Then where's it going to be in November? Do people even remember in terms of where they were in terms of employment in these months? So not only is there going to be this potential of when do we get the data, but once we get it, how clear is that data actually?
I really miss the cadence of this, don't you? First Friday of the month, no jobs data.
I was really enjoying AI's poem about it. I think that it really kind of got the feeling of the fervor, the excitement. What's your payrolls guest? All estimates finally in.
And you guys are saying this even though around this table we've always talked about the fact that is the data of good quality. And now you don't know what you're missing until it's gone.
There's a drumbeat to financial markets. There's a rhythm, a cadence to it. And just that drumbeat is payrolls every first Friday of the month.
Now it's
CPI,
you, Mitch.
Then you get the Federal Reserve, and now it's like you, Mitch, and the beat is just off.
No, it's an abstract. It's sort of an abstract, like ADP. All of a sudden, Challenger.
Off. Like a child smashing a tambourine or something.
Hungry hippos. Hungry hippos.
Yeah, not good. From New York, you're watching Bloomberg TV.
Nationwide is more than you think.
That's right. Their Social Security tool helps me guide clients when to file, maximizing their income.
So when is the right time to file?
It depends. Somewhere between 62 and 70.
Oh, it's age. Right. It's not like 2 p.m.
Today's cameras don't just capture reality, they enhance it. Cameras can translate languages and help people navigate unfamiliar streets. Secure and reliable connectivity from AT&T Business helps make it all possible, turning vision into action and helping us stay connected.
At JustWorks, we know these aren't just your employees, they're your people. Like Danielle, who took your social following from 1K to 100K and is already investing in her 401K.
I've got big retirement plans. Huge.
Or Lisa, she's the type to get all type A on her timesheets.
I'm a freak in the sheets.
And Seamus, your latest hire who's not here because it's 1 a.m. in Australia.
It's 2 a.m.
That's right, you're hiring in internationally now. We do your human resources right so you can do right by your people. JustWorks, for your people.
It's like an office.
Do we really need more protein in our diet? And what New York City's new mayor will mean for the city.
Last night he started with, well, I'm going to make a more efficient government. That business likes to hear.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard, oh boy, can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
We have nice earnings growth, but it's being pushed by Mag 7.
Until this bull market is over, probably these growth stocks lead the way.
There's this euphoria that's taken over the equity market. We still do feel confident at the stage we're in coming out of earnings season.
The story is still positive.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And your price action looks like this. Your scores shaping up as follows. We're down by 0.5% on the S&P 500. On the Nasdaq 100, we're down by 0.6. Adding to the week's losses in the bond market, 2s, 10s and 30s. What a choppy week for fixed income. 4-year bond yields just about unchanged. 10-year bond yields rather at 4%. 2-year bond yields down about a basis point at 354.51. Typically, I'd be saying 29 minutes away from the payrolls report. Of course, that's not happening. We're about 2 hours away from UMich consumer sentiment going into the weekend. That is all we've got going into the weekend.
Makes me a little sad, I have to be honest. It really is sad because we would have an ultimate check on all of the conflicting data that we had this week. We would have had non-farm payrolls. We would have been looking at the public and non-public payrolls numbers. We would have been looking at wage gains. There's so much information that we could have talked about, but instead we're going to sit here and talk about whether you prefer Wendy's or whether you prefer McDonald's, because that's the data.
Job cuts.
Challenger job cuts, because that's the data that we do have, aside from your own personal favorite, the University of Michigan.
Love you, Mitch. Can't wait for you, Mitch, of course. Are we really missing payrolls? Take a step back. I got a message moments ago saying we've had payrolls revised
To see the channels you've heard most recently, simply log in. That's AccuRadio personalized.
Thank
Looking for affordable, reliable auto insurance? Freeway has you covered. Freeway has rates as low as 99 cents a day. Stop paying overpriced premiums and start saving today. With hundreds of options to choose from, Freeway could get you insured in minutes. With Freeway, savings could be a click or a call away. Freeway is available online, by phone, or in person. With rates this low, you could be saving hundreds a year. Tap the link below or go to freeway.com for a fast, free quote. Freeway, driving savings. Some restrictions and fees may apply. Quoted price for liability premium only.
At McDonald's, you get to save on your faves during any time of the day. Because now, you can grab a sausage, egg, and cheese McGriddles meal for $6 during breakfast. Or a 10-piece chicken McNuggets meal for $9 during lunch or dinner. Price and participation may vary.
Monitor de precios por Expedia. Vives para usar tu modo no molestar. Vivimos para rastrear vuelos hacia afuera de la oficina. Expedia. Vivimos para viajar. Beneficio disponible para socios.
Let your own passion for music help you curate the perfect channel for you. Rate the songs you love on AccuRadio with 4 or 5 stars and build your very own 5-star radio.
Looking for affordable, reliable auto insurance? Freeway has you covered. Freeway has rates as low as 99 cents a day. Stop paying overpriced premiums and start saving today. With hundreds of options to choose from, Freeway could get you insured in minutes. With Freeway, savings could be a click or a call away. Freeway is available online, by phone, or in person. With rates this low, you could be saving hundreds a year. Tap the link below or go to freeway.com for a fast, free quote. Freeway, driving savings. Some restrictions and fees may apply. Quoted price for liability premium only.
At McDonald's, you get to save on your faves during any time of the day. Because now, you can grab a sausage, egg, and cheese McGriddles meal for $6 during breakfast. Or a 10-piece chicken McNuggets meal for $9 during lunch or dinner. Price and participation may vary.
Mike Keppel here, Patriot Software's founder. My first business startup was in the basement of a factory. We had no heat, no air conditioning. Our only office visitors were rats, birds, flies, and snakes. We used blankets as our office walls. When the floors would flood, we'd have to write software while sitting on top of our desks. It took us 4 years to earn a normal paycheck after quitting our corporate job. We know how hard it is to start a business. That's why Patriot Software charges so little for our accounting and payroll software.
Keep your time and money. Holiday PSA from DSW. This is your reminder that shoes are a gift, literally. So unwrap something good, like boots that inspire your next big adventure, or cozy slippers that give you an excuse to stay in, or sneakers that feel like pure joy. Because shoes aren't just shoes, they're exactly what you wanted. Let us surprise you so you can surprise them. Find shoes that get you and everyone on your list at prices that get your budget at DSW stores or DSW.com.
Downy Rinse fights stubborn odors in just one wash. When impossible odors get stuck in.
At Cal Poly, 86% of our students are employed before they even graduate. Because here, every mistake is a lesson that prepares you to be ready on day one. And you learn more when you learn by doing. Cal Poly.
Try your own hand at curation. Build a channel of your favorite songs. When you hear something you like on AccuRadio, rate it 4 or 5 stars and it goes into your own personal 5-star radio channel.
At McDonald's, you get to save on your faves during any time of the day. Because now, you can grab a sausage, egg, and cheese McGriddles meal for $6 during breakfast. Or a 10-piece chicken McNuggets meal for $9 during lunch or dinner. Price and participation may vary.
Shop smart and save big this week at your Navy Exchange. Enjoy everyday low prices, military exclusive deals, and of course, no sales tax ever. Want more savings? Join our Next Level Rewards program for monthly rewards, scratch card savings, a birthday gift, and other great perks. Not a member? Join in-store or at mynavyexchange.com. The Navy Exchange, anchored in value for you. Open to authorized military and civilian patrons only.
What's that sound? That's the sound of Downy Unstoppable scent beads going into your washing machine and giving your clothes freshness that lasts all day long. There it is again. It's like music to your ears, or more like music to your nose. That freshness is irresistible. Let's get a Downy Unstoppables bottle shake. And now a sniff solo. Nice. With Downy Unstoppables, you just toss, wash, wow, for all-day freshness.
Becoming a medical assistant is a great first step into the healthcare world. It opens doors to a career in pediatrics, dermatology, surgical offices, and so much more. And in just 9 months, this could be you. Pima Medical Institute's Medical Assistant Program provides hands-on training in real-world labs, clinical externships, and the support of fellow students and teachers. Classes start soon. Visit pmi.edu for details. Pima Medical Institute. You can get there from here.
Hear that? That's the sound of the internet. And that's the sound of skiing with a lift ticket in the 90s. Now, you don't have to wait to load that sick ski video. And you don't have to use lift tickets either. With Epic Day Pass, you have the flexibility to build your own pass and pay less than lift tickets. Just choose 1 to 7 days to ski or ride throughout the season at resorts like Vail, Breck, Park City, and so many more. Woo-hoo! That's the sound of your best winter yet with Epic Day Pass.
The workday is better, and you're better when you're motivated, focused, stress-free, and happy. Music can get you there. Explore the selection of workday channels at AccuRadio.com. Let your own passion for music help you curate the perfect channel for you. Rate the songs you love on AccuRadio with 4 or 5 stars and build your very own 5-star radio.